Hey everybody, welcome to Verified Investing's Game Plan. My name is Gareth Soloway, Chief Market Strategist here. Now again, we have some big things to cover today. We're going to look at technical analysis of the charts. The PPI data just hit, a bunch of other key movers and shakers on the charts. We'll go over Bitcoin's reversal yesterday, which got it back above that key level without a daily close below 92,000. That is short-term positive, although we'll see if it can last. Gold today up just a little bit following the PPI data. We'll look at the 10-year as well as the dollar. Lots to go over, guys. All right, so if we come over here, let's take a look at where markets are. PPI data came out this morning. Month over month came in lower than expected, so less inflation on the producer side. The markets were bracing for a bad number, so this was ultimately a positive 0.2% versus forecast of 0.4%. That is a big positive, but this is the kicker. This is only the PPI data, producer price index. Remember, we have to watch and see tomorrow's CPI number. Does it confirm? All right, so again, do we see lower inflation tomorrow on the consumer side? Now remember, the consumer side inflation is much more important than the producer side. So it's good to see these numbers from the producer side coming down, but the market doesn't take it quite as seriously. In fact, you can see the reaction here was a nice pop in the S&P, and then it's starting to come back in a little bit. So it might be enough to keep the markets green today, but really it's all about the CPI data tomorrow versus what forecasts are. All right, so month over month 0.2% versus 4.4% expected. PPI year over year 3.3% versus 3.5% expected. So both numbers better, and you can again see the market reaction. Yields initially fell back, although they have recovered just a little bit, and we continue to sit in that same zone, just under 4.8%. All right. By the way, as we get into the charts today, you can see yesterday we opened down right at this gap fill right here. We talked about that yesterday in the game plan, and we did recover. You can see right here, and we rallied back up just a little bit, and today it's looking like we'll continue to inch up just a little bit off this short-term technical level. Now, let's be clear. Nothing has changed overall. This wedge pattern has broken. We've consolidated. We even put in that head and shoulders pattern. I still believe, based on technical analysis and probabilities, that we're ultimately going down further. But in the near term, everyone was bracing, so fearful. You saw the VIX starting to get above 20. That's a key indicator of fear starting to creep in. Everyone was worried about inflation. They're getting a little sigh of relief today, which is helping keep the markets up just a little bit. All right, so things to look for here. One other factor. So yesterday we saw that rally off the gap down. That was partially to do with a rumor slash headline that Trump is looking to impose tariffs slowly over the course of many months. So not just coming in gangbusters and being like 50% tariffs over everyone, but doing it slowly. Now, we saw a rumor like this about a week ago that he then came out and dispelled, but so far that hasn't happened. So again, my thought is that he is aware, as is his administration, incoming administration, about inflation upticking, and he wants to make sure that these tariffs don't add to that inflation measurably, and he's trying to kind of let the markets know that there is some light at the end of the tunnel on the inflation fight, hopefully. All right, a couple other things to go over here in the morning action. As we get into it, let's take a look at the U.S. dollar. The U.S. dollar today, and this is the chart here on the dollar, right? So if we look at the dollar, you can see again, the dollar had a little bit of a micro topping tail yesterday, not enough to get my attention. Today, the dollar is still holding up, although it's not back to yesterday's highs. If the dollar does push higher, there's a very clear resistance trend line that comes up right around this level here. It's right around 110.75 or so, 110.80. So you do have a level that's getting very close. The dollar short term is very overbought. So again, whether we touch this or not, I'm starting to look for a bearish move on the US dollar. Again, just be aware we still may go and touch this white trend line, but that would be kind of your maximum upside before a pullback. The pullback could come earlier as well. Same thing, by the way, on the 10-year yield. This is the 10-year yield initially falling, but look at how quickly it's recovering. Why is it recovering? Well, basically people are saying, okay, well, that's great on the producer side, but what about the consumer? and that's what people are holding on to going into tomorrow. And that, by the way, is exactly why the markets, again, are giving back some of their gains here this morning, is that we are now seeing that, okay, the yields, which pulled back initially, remember, the markets have this inverse relationship. So when the yield comes down, the markets go higher. All right, when yield starts to push back up, which it's doing now in the later morning session before the stock market opens, we're seeing the stock market come back in and give up some of those gains. So again, still holding gains in the stock market. The question is, will it last throughout the day? And then what's that CPI data tomorrow? Now, speaking of which, later today in Trading the Close, I'm going to go over those earnings announcements that are coming out tomorrow morning, inclusive of JP Morgan Chase. We'll look at those charts. We're going to find our technical levels for trading going into the next morning, and then obviously, I can go over that in the game plan, as we do have a bunch of earnings starting to roll out, including on Thursday, we'll have Taiwan Semiconductor. So that's going to be a big one for the semiconductors here. Taiwan Semiconductor reporting Thursday morning. All right, going back to the 10-year yield, notice again here you have the daily chart of the 10-year. After initially falling, we're pushing back up, and that again will take the wind out of the sails of the market if it continues. Upside maximum is this area here. Look at this amazing zone here on a trend line. So you go back here, you have this low here, and then all these lows right through here, right? All through this area. And so if we go back into this line, you would expect major resistance. You also have a double top coexisting right at that 5% level. So I've said to you guys for the last couple weeks that, yeah, we could go up a little bit more on the 10-year yield, but 5% is probably your max zone right up there. And again, for me, it'll be just continuing to accumulate the TLT. The TLT, by the way, is the 20-year bond. So essentially, that going up means yields are coming back in. So it's a way to play the yields via an ETF that is generally pretty liquid. It's a pretty liquid ETF. All right, a couple other stocks in motion today. KBH reported earnings after the bell yesterday. That stock is having a very good morning. So even with yields doing pretty well here in terms of that putting pressure on the housing market, KBH had been beaten down going into this number. Look at the drop here from 86 down to a low yesterday of 62. But today we are seeing it back to 73. Now, what do? As a trader, I immediately look at my levels. So I say, okay, we had a straight move down here, right? So let's do our Fibonacci retrace and start there. We do our fib. What do we get? Well, we get this level here at 71. We're already above that. Just above 74 at 74.20, we have this 50% retrace. Now, I say to myself, okay, 74 to 74.20 is a 50% fib retrace. Is there a secondary level here? And I say, wait a minute, there is. Right here, you have a pivot low as well. All right, so again, we're starting to come up with a thesis of how I may trade this in the Apex Live day trading room today. And again, we have a secondary level around 77, but again, going back to those fibs, you take that high there down to the low, and it matches right there. And look, the second level at the 618 is right there as well. So I would have my starting position above 74, my add level around 77. That would be your short zone today on KBH. Very cool how that all aligns beautifully on KB Homes. All right, so we have that stock. Not many other earnings of note, but we got to start looking at yesterday in Trading the Close. I talked about Rigetti, right? Now, again, I want to show you guys this. So if we go over to the big board here, we can see that we have Rigetti has fallen basically 78% off of its highs. It's a 70.786 Fibonacci retrace from this high down. It's really just a fraction lower, like right there. So that's a level to watch. You also have this low here, and look at that drop. In 1 week's time, it goes all the way down and retraces that move. Now, I told you guys, get the heck out at the highs. I said, when the music stops, this thing is going to collapse. Well, it certainly did collapse. I would say a 78% decline from the beginning of the move to the high, that would be considered a collapse. But is there an opportunity here? Well, if we get risk on today or tomorrow, yeah, there is. And it's at major technical levels. You have this trend line, you have the Fibonacci level. And if we go over here, I want to pop one more thing on the charts. Take a look at this. We throw the 50 moving average on. And again, this is the daily 50 moving average, simple moving average, and look at what we hit as well. So listen, as I always say to you guys, there is no guarantees in trading or investing. We know that. But if I'm looking at this, and I've been with my members of Smart Money Stocks, I said, you know what? We're down from 22 basically to to about $6, let's accumulate just a tiny little position where we can add a little bit lower. Now, again, the key is understanding it might come down. There still might be some liquidations via margin calls and such, because think about people that bought it up here or here or here, right? I mean, if those people are still holding, they could be getting margin calls, and I'm sure there's a lot of people out there doing it. So that could be forced selling that could push it a little bit lower than this level. But in this range, at some point, we should get a technical bounce. That goes for QUBT, SoundHound, a lot of these other players out there as well. They are finally coming into technical levels. All right, so again, the exodus is obviously underway, but we'll see again. And here's your 50 moving average on Rigetti here in the current trading atmosphere. All right, couple other things to go over here. QUBT, much the same. You can see all these technical levels down here. Here's some technical support down to about $4.65. But again, look at the reversal that these things have undergone. It is pretty astounding. And then SoundHound was one of the strongest stocks here. If we pop over to the daily chart, look at where this ended yesterday. Perfectly at the 618 from the beginning of this up move to the highs, retraced to the 618 Fibonacci level right here. And again, I always stress this because I want people to understand, number one, these are shorter term trades. For me, it's a swing trade. So I may be out of it today, I may be out of it later this week, I may be out of it next week or next month. We don't know yet. It's ultimately when it pays out or when I decide to cut the trade. But the point being is that I have no clue where these stocks will be in a year from now, in 5 years from now, in 10 years from now. Some may be huge. They might be $100 billion companies. Some could be out of business. That's not the point. I couldn't care less. This could be a fly catching company. It could be a widget maker. It doesn't matter. I couldn't care less what they do. The key is it has momentum, and momentum breeds psychological technical levels, which is what's in the charts, and that I can trade. Again, it could be they're a rock quarry for all I know. It doesn't matter. And that's what people have to get over. If you're watching back at home or wherever you're watching me, understand that when I'm trading Apple, I couldn't care less that they're an iPhone maker. When I'm trading Google, who cares about Chrome, Google, all the other stuff? It's about the chart. And human nature repeats over and over. Bubbles, bust. Fear, greed, all of those emotions repeat, and that gives me an edge when I use the charts to decipher it. Okay, all right, couple other things to go over here. Let's jump over to Bitcoin real quick and see what we have on the Bitcoin chart. Bitcoin right now is trading up, but I think yesterday in the game plan, we were talking about how Bitcoin was breaking, and we'll go over to the big board and take a look here. But Bitcoin was looking right here, right? So we have this low here was yesterday at around 89,000, but by the end of yesterday, I should say, it recovered back above the technical line. And that's what I said to you guys yesterday in the game plan. I said, all right, so it's below. If it closes below, first of all, we have to look for confirmation. But if it rallies back above, then this line is holding, right? So this support continues to hold. Now we're seeing a little bit of an uptick. So what does this mean? Well, you're still stuck in your bearish megaphone pattern here, right? So there's your bearish megaphone right there, kind of going out there and, screaming through the megaphone. But the idea is this could trade, as for all I know, as high as this upper level of resistance. But I have to respect this level and this level until one breaks and confirms. Once it breaks and confirms, you should get a major move in that direction. Again, bearish megaphone by the name, it slightly favors the downside, but just be aware, know your levels and then just go by the levels. Don't go by emotion, all that other nonsense. Go by the levels. All right, a couple other stocks or trade signals to look at here. If we look at gold today, gold is coming down a little bit here. As kind of yields are pulling back, maybe people are breathing a sigh of relief. They're not feeling so panicked about holding gold. Same thing with the dollar. The dollar's inching up. That's taking, again, a little bit of a bite out of gold, so gold's coming in. But look at gold. It's just stuck, continuing to be stuck in a range here. Much like Bitcoin, and we go over to the big board here, much like Bitcoin, this is more of a wedge pattern, right? In fact, it is a wedge pattern. You can see a triangle is essentially a wedge, right? Where price is getting wedged between these two lines, and eventually, at some point over here, it either has to go one way or the other. That's what a wedge pattern essentially is. Now, Bitcoin's a megaphone pattern, but ultimately, the question is, which way do they both break? and that'll be something that should be a bigger move. If we break to the downside, I have a downside to around 24.25. If it breaks to the upside, it's a hop, skip, and a jump to the all-time highs. And still, either way, even if it breaks to the downside, I still think it's going north of 3,000 in 2025 by year end. All right. Couple other charts that we want to take a look at right here. We want to look at silver. And silver, again, has struggled, no doubt about it. Yesterday was not a pretty day on this. Today, it's basically flat, holding up just a little bit. Maybe the Fed can cut a little bit more interest rate action. Again, it was between one rate cut going into this PPI data. Now it's closer to 1.5, maybe 2 cuts. You know, it's kind of on the borderline here. But really what we're watching for is, do we break this line here at 28.80? If that breaks, you're heading to my 27 target. Next up, oil. Now, oil, you guys know, I did short some oil. I added to the short up yesterday morning, and so far we're getting a little bit of a pullback here, nothing to write home about. But again, a lot of resistance here up in this $80 range or just below. And I'm still, based on chart analysis, it still tells me that we should see a significant pullback. And by the end of 2025, I still think we've broken below this major support at 65 and are probably headed much, much lower. Lastly, natural gas here, guys. Let's take a look at nat gas. Natural gas today, another down day, but just keep in mind that this is a whole lot of chop. So again, unless you're a really seasoned trader like day trader, for the most part, you're not trading this. This is just sideways chop. You can short this upper line here and then watch in case this line breaks to the downside. You'll get a big dump. But really, the only trade I would do at this point is if it rallies up into this line, there's a shortable opportunity there. You can see every time it hits, it has a pretty big pullback. So if it were to go up there, eventually you'd look for that. And just remember, one other stat to go over here, and I'll go to the big board just to express this to you guys in terms of education, is that when you have upsloping trend lines or parallels, about 8 out of 10 times they break to the downside. So when they're upsloping like this, again, upsloping parallels and prices here, 8 out of 10 times they break down. Downsloping trend lines are the opposite. So I look for stocks that are trading like this, right? Because eventually the odds are they break out. You just have to watch for that breakout. So again, 2 key chart setups to keep an eye on, using parallels or using trend lines to follow. The stuff, again, I teach in the Winning Trader series. Okay, so interesting day today, to say the least, right? So if we think about what the markets are up to today, we had PPI data out this morning coming in better than expected or lower, which means less inflation on the producer side. The markets are still nervous. Yes, it gave a little sigh of relief, but it's looking more and more like the markets. Yeah, they're up a little bit right now, but it's not a robust total inflation off the table type issue. It's more about waiting for that CPI data. And then we also have to keep an eye on, later this week, we have retail sales and we have earnings from not only Taiwan Semi, but also key players like JP Morgan. What's Jamie Dimon going to say about the U.S. economy? All of these keys. I will cover it all. Later today, we'll go over those JP Morgan charts ahead of earnings tomorrow, as well as what the markets do today in trading the close. Thank you all for tuning in. I'll see you tomorrow. Take care.